Hey amigos, what's up? This is Rauf and I'm here to bring out the paramount importance of financial markets in our economy. Let's get started. Financial markets match buyers and sellers or lenders to buyers at a given time and reflect the performance of the economy. Demand and supply are a function of the market. Businesses need capital to grow and expand their respective business. Thus, where the financial market plays a critical role in the build-up of capital and production of goods and services, providing access to capital. In a well-developed and efficient market, the transaction costs are always lower. With efficient transfer of funds, it can be mean also a lower cost of financing and a safe return on investment. In well-developing countries which have limited financial market, the poor legal system, transparency may make it more costly to raise capital and may lower return on savings or investment vis-a-vis the risk. A good financial market helps in the creation of wealth and provides a link between savings and investment that meet the short-term and long-term financial needs of both the household and corporate sector through efficient mobilization and allocation of surplus. Macroeconomic factors mentioned such as growth, inflation, business cycles, etc., have a strong impact on financial markets. Financial structures fund businesses and companies, contributing to job growth and, in turn, the growing economic development and trade. Increased trade leads to increased competition, such as sales and marketing, that increase jobs in these sectors further. Whether it is primary, secondary, and tertiary sectors, all need capital for growth, and the need for capital is balanced by the financial system. Security is the right on the issuer's future income, profit, or assets. Usually, financial markets are categorized by transparent pricing, simple trading rules, costs and fees, and market forces that decide the prices of securities that sell. Financial markets affect the opinion of the public and provide the outline of the economic landscape. A continuous rise in the stock exchanges such as Nifty, BSE gives confidence to these businesses. In such scenarios, businesses hire more employees, decreasing unemployment and in turn producing more disposable income to the common people. In the case of the diminishing market or in the event of the market crashes, business becomes worried about their financing, making layoffs and panic in the economic ecosystem. Capital markets and institutions such as banks play a key role in the economy by controlling the risks and allocating savings to productive activities, facilitating economic development and enhancing the overall welfare while running smoothly. The right mixture of the well-developed financial market and the variety of capital products and resources available better fits the requirement of the investors as well as those who are seeking capital and who has or have excess capital, thus fueling the engine of the economy or simply capital formation. A sound economy can only exist when there is a well-developed market. The Indian financial market has developed and is bigger now after the liberalizing policies in 1991 and is different from what it used to be back in the 1980s. An efficient financial market can serve the following purposes. 1. Supporting investors in managing their capital for different time horizons with financial products. 2. It provides a source of capital for businesses depending on long-term or short-term financing requirements for both private as well as the government. 3. Minimizing risks by some strategies such as hedging or diversification. 4. Acts as a mirror reflecting the economic conditions of the country or the states. 5. It's a major confidence booster for attracting capital through foreign inflows or investments. 6. Provides access to information to market participants, enabling or taking precautionary measures. The financial market has become a source of judging point on how global or national economies are performing in today's scenario. The effect of government economic policies such as fiscal, monetary can be easily observed on stock and bond exchange markets. The volume of trade in stocks and bonds reflect the performance of the businesses such as the sovereign. For example, when RBI takes the decision to increase or decrease their interest rate, the effect can be easily observed on the bond or equity market. Financial markets are used by well-developed economies to maintain their economic and social stability and increase their economic level. Dormant or developing economies look at the financial market to finance its BOP, that's balance of payments, accelerating its development agenda for the social and economic stability. For new economies or developing economies, the growth of the financial market highly depends on the reforms taken by the government. Also, the reforms should be in such a way that it should match the frequency of the local or international level investors' requirements. Thus, they give us the considerable importance to the growth and development of the financial sector to achieve the agent of employment generation and poverty reduction. I hope this session was interesting and informative. If it was helpful for you guys, please do give it a big thumbs up and do not forget to subscribe to the channel for latest updates. Until next time, thank you, bye-bye.